Mike, thanks so much. Do appreciate you allowing us to spend some time with some of the members who want to learn more about the PPP, as well as some of the tax considerations that have been evolving over the past, I guess, 45 days or so. Mike, as you've said, and to everybody here, welcome. Today's webinar, we're going to talk about really just 4 areas. We're going to talk about individual and corporate tax provisions, short-term cash generation, and also creating a response plan. Now, those 2 first parts are going to be my piece. Frank is then going to finish off really clean up here in terms of the small business loans and grants, and then the all-important PPP loan program. So all of this is rather evolving. I know that many of you are probably very frustrated. As a firm, we've been really diligent in working on this information for, well, since it started. And so as we talk, we're trying to give you the most up-to-date information that's been written. Sometimes the law has been very vague. So at times we've just not been able to get all the information when we've needed it. We're getting it as the government's writing the law, reading it every night, discerning it, and then sending out to all of our clients and COIs. I know I send out a daily email to all of my clients and contacts, and they've found it, quite frankly, very helpful. But the goal here, very simply, is to educate you on where we are, where we're going, and to give you more insight that perhaps you don't have. So let's talk about April 15th and the 2020 extension. Very simply, back on March 15th, Mnuchin made an announcement, very simply saying, just file your tax returns. You don't have to worry about any interest or penalties, just file your tax returns. Quickly and shortly thereafter, 3 days later, he went to saying the due date is extended now from April 15th to July 15th. 3 days, 3 days, 4 days, and then 5 days after that, on April 9th, IRS Notice 2023 essentially rolled out a very broad-based expansion of the filing deadlines. And what it basically said was that individuals, corporations, partnerships, all could now be extended through July 15th. What's interesting in all of this is the fact that, and many questions came to me from my clients saying, well, what about my quarterly estimated tax payments? Certainly the Q1 estimated tax payment is due July 15th. Second quarterly estimated tax payment was due June 15th. The government came in through Notice 2020-23 and said effectively the first and second quarter estimated tax payments will be due on July 15th. What's interesting about that is then your next quarterly tax payment will be September 15th. So if you think about it this way, you've got 3 quarterly estimated tax payments that are going to be due in a period of 2 months, 3 months the most. So I mention that because cash flow will continue to be the priority, and I'll talk a little bit about cash flow at the end of my presentation. But keep in mind that if business continues, if it continues the way it was, probably not. But if you still owe quarterly estimates, know your timelines and when quarterly estimated tax payments have to be made, because you don't want to miss these due dates. So I think we talked about the filing deadlines and the payment extension dates. We now have, let's talk a little bit about the legislative enhancements. Phase 1, there's been more than one phase here. But essentially on March 6th, Congress came out with the Coronavirus Preparedness and Response Supplemental Appropriations Act of 2020. There was an $8.3 billion aid package in spending money on various items, which again, at this point was not until, was prior to the president declaring a national emergency. On March 13th, the president then declared a national emergency, and here we are with essentially making the IRS extending the due date from 4/15 to 7/15, and something that we actually already talked about. In terms of phase 2, March 18th, the Families First Coronavirus Act came out, and in this case, it was basically paid leave and family leave with the refundable tax credits for businesses. Again, the goal here was to allow individuals, and we'll talk about this in a little bit, but basically to allow individuals to continue to get the benefits that they otherwise would have gotten had they been a larger company. So essentially, the paid sick and family leave provisions allows the employers to keep their workers on payroll and to ensure the workers are not forced to choose between paychecks and the public health measures. It applies to businesses that have fewer than 500 employees. The law is essentially designed for small and medium-sized businesses to put them on the same footing as employers that essentially allowed them to have those same benefits. I can tell you from practice, not a lot of clients took advantage of this, and because the laws and the rules have changed so dramatically, many of these provisions were actually missed by clients, but I think more beneficial programs started to develop as we started to move along. Another benefit was the employer retention credit for employers, which was subject to the closure due to COVID-19. This was a payroll tax cap, essentially, of up to $5,000 per employee. Again, many individuals and many companies didn't take advantage of this because they quickly saw that the credit was not available if you then went in and applied for the PPP. But what was incredibly beneficial that was rolled out shortly thereafter was the employer payroll tax deferral. This, I have to tell you, is probably one of the nice shining lights in some of the benefits that the government has rolled out. I know Frank's got a lot to talk about with the other information that he has, but this happened to be a pretty good situation. Employers can defer payments of their FICA or their FICA tax, which is essentially Social Security tax, 6.2%, from payroll that's made starting on March 27th, 2020 to 12/31/2020. That election is also 50% is available for people who are self-employed. And again, it's on only the Social Security piece, the 6.2%. It's not available, however, if the taxpayer has debt forgiven on the covered loan under the PPP, but the taxpayers can defer up to the tax forgiveness is granted by the lender. This is an incredibly important part to remember. I was just on the phone with 3 clients this morning who had received their PPP. They were asking about this employer payroll tax deferral, thinking that they no longer could, in fact, defer their payroll taxes for the period of time. And I told them, no, that's not the case. Essentially what the PPP is, it's a loan. And then you'll get your money. And at the end of the covered 8-week period, you'll apply then to the lender and ask for forgiveness on some or all of the loan. The lender then has 60 days to define or decide how much of the money that they've loaned you would be forgiven. Understand that up until the day that they grant the forgiveness, you're able to defer your employer share of the 6.2 on Social Security. What this means is that you're able to, if assuming that you get the grants immediately, you get the money today, then you've got 8 weeks to spend the money. You then apply to your lender for the forgiveness. They have 60 days to respond. We're probably looking at fall, late fall, before you finally know whether or not your loan has been forgiven. That is the date in which you can stop deferring your payroll taxes. You then have an opportunity to spread that deferral, 50% paid in 2021, and the other 50% paid in 2022. So again, this is a very good situation. And no, the deferral does not stop when the money is given to you on the PPP. It stops, or the deferral stops when the date the forgiveness is granted by the lender. My suggestion here is that you talk to your payroll company. Well, let's talk about some of the other provisions that Congress thought would help enhance businesses, provide some cash flow for them, and allow them to get back some of the cash that's been spent with the government over the past several years. The TCJA, that was the Tax Act of 2017, created a lot of provisions whereby refunds were limited. meaning that NOLs for anything after 2017 could no longer be net operating losses, could no longer be carried back. They could only be carried forward. And then we're only limited to 80% of whatever the taxable income is. That has changed. The rules now state that NOLs arising in years 2018, 2019, and 2020 can then be carried back 5 years. For those of you who are C corporations and can carry back any losses that occurred in 2018, 2019, and 2020, back to pre-TCJA years, where the tax rate was for C corporations 35%, this could be a permanent benefit and a good way to get money back. There are quick applications that you can file to get the money back sooner rather than later, but essentially it's a great benefit for those of you who have net operating losses, had no way of carrying them back. You can now carry them back 5 years. They've also retroactively removed the 80% of taxable income limitation. Again, that's a nice benefit. But again, in 2021, the 80% rule goes back, which includes the 2018 through 2020. Under 461I, excess business losses, this is also, I think, a very, very good benefit. This is where, under the old TCJA tax law, if you were a business owner and you've had pass-through losses, again, non-corporate taxpayers, individuals, you had pass-through losses, regardless of basis, that exceeded $500,000, then you were limited to $500,000 of the losses that you could take, regardless of your basis in those companies. So what the law has now done, and essentially has said, is that if you've got flow-through losses, and if you're an individual taxpayer and those losses exceed $250,000, you can take the entire amount of loss. If you're a married filing joint, your loss was at one time limited to $500,000. There are no longer limitations, which is a very, very good thing. I had a client last year who had $1 million loss, married filing joint. He was very surprised when we filed his return that he was only limited to $500,000 in a loss. He's the first person, quite frankly, that I thought of when they changed the rules. And one of our first orders of business is going to be to file an amended return so that he can get back all of the taxes that relate to the excess $500,000 that he wasn't able to take in 2018. Next slide, refunds for AMT credits. The government, when they changed in the TCJA, there was suspension of some refundable credits, especially for C corporations. The government now allows you to advance those credits to receive them much sooner than what you otherwise could have. My suggestion is check with your CPA, find out where there might be opportunities where you've got credits that are sitting there, AMT credits that are sitting there that you might be able to get back in a quicker fashion. There's also a temporary modification of 163J. For those of you who had your interest expense limited as a deduction, because of the 30% of adjusted taxable income, that 30% has now been raised to 50% of adjusted taxable income. There again, that's a big benefit for those of you who your combined revenues are more than $26 million a year over an average of 3 years. If your company does less than 26 million in revenue on an average of over the past 3 years, then this rule does not apply. But again, if you've got a company, revenues over $26 million, and you are running up against a limitation on how much interest expense you can take as a deduction, that limitation has been raised from 30% to 50%. Also, under the QIP, Qualified Improvement Property, again, a big benefit. Qualified Improvement Property is any improvement to the interior of a non-residential building, essentially a commercial building. After the building was placed in service, other than elevators, escalators, building enlargements, and changes to the building interior structural framework. Prior to this technical amendment, any assets that were put in service that meet the QIP that were classified as what we refer to as 20-year ADS classified property was not eligible for bonus depreciation. It is now eligible for bonus depreciation. So my recommendation here and the takeaway here is any improvements that you've made to your properties that your accountant has classified as 20-year period ADS, alternative depreciation system, you can now go back, file an amended return, and essentially get and apply bonus depreciation and get your refund on the excess depreciation that you can now take. Cash payments, individual provisions. I think pretty much everybody knows that checks have been in the mail, and for those of you who meet the criteria of receiving your cash payments, would have already received the money. $1,200 for adult individuals, $500 per child. That assumes that if you're a single person filing a single taxpayer, if your AGI is less than $75,000, you'll receive the full benefit. That reduction goes up $5 for each $100 of AGI over the relevant threshold. If you're married filing jointly, that threshold is $150,000. And again, depending upon how many children you have, you get up to $500 per child. The government, again, in their desire to get as much cash into the hands of taxpayers as they possibly can, they've lifted the 10% early withdrawal penalty on any monies that are taken out of a qualified plan, 401k, IRA. Generally, that applies, the 10% penalty applies for anybody who's less than 50 or younger than 59 and a half, and is applied to any distributions if you take the money out, what they call before at an early distribution. They've lifted that 10% penalty, provided that you use the money in a situation where you or your spouse are diagnosed under COVID-19, or if the taxpayer experiences adverse financial consequences as a result, quarantine, furloughed, laid off, reduced hours, and all of that. That's a pretty big benefit. Also, if you take the money out, instead of having a 60-day rollover like we've all been accustomed to, you now have a 3-year rollover, which means that no taxes are due on the money, provided that you then recontribute to another eligible retirement plan, another IRA, and the money won't be taxed at that time. If, however, you do not roll that money back over within the 3-year period, the money then becomes taxable, but they allow you to pay the taxes over a 3-year period. Retirement loans, retirement plan loan limits, essentially that has been doubled from a maximum of $50,000 to now $100,000. They also grant taxpayers 1 additional year to repay existing loans that are due by 12/31/2020. Required minimum distribution rules have been temporarily waived, and I think, again, that's another good thing, not having to pay the taxes on the money that you take out. In terms of pension funding, we've got, they've eased the contribution date, which has been extended now to 1/1/2021. And that means that if you need to make an IRA contribution, a SEP, a simple plan, a 401k plan contribution, you now have a little bit longer to make that contribution. Again, knowing that cash flow may be tight, they're giving you a little bit of extra time to fund the pension contribution if you so desire to make a pension contribution. $300 above the line charitable deduction. Usually charitable deductions or contributions are an itemized deduction, and if you don't itemize, you're not going to be able to get the benefit of a charitable deduction. But in this case, the government has said, listen, regardless of whether or not you itemize, we're going to give you a $300, what we refer to as above the line charitable deduction. And that's an extra $300 deduction that you otherwise wouldn't have gotten. What they've also done is they've lifted the limitation and increased the income limitation on charitable contributions. Prior to this change, charitable contributions were limited to 60% of your adjusted gross income. There is now no longer any limitation on how much money you can make in terms of charitable contributions. They've also inserted exclusion from income of an employer payment of a student loan. If you as a business owner decide to contribute $5,250 towards employee student loans, that payment would not be taxable to your employee. You still get the tax deduction, but that payment is not taxable to the employee. In terms of other items, other business items that we're considering here, we've got, you know, one of the things that when we were talking about cash flow. And one of the things that we quickly as a firm decided to do is get out there and start talking about cash flow with all of our clients. It's all about cash flow. Things that we put as a list on a great article that was written by one of my partners talked about what do you do during the crisis and where can you find money. So we created a list that we think is pretty broadly written, and things that perhaps you've already considered, but you may want to consider as you continue to weather through this storm. Things like, do you have a line of credit? Can you renegotiate any existing lines of credit? Can you defer any of your rental payments? Are you looking at all of the government programs that are available to you? Can you accelerate payments from customers? Can you defer some of your expenses? Will some of your employees accept restructured compensation plans? Maybe not, probably not. What can be done to review maybe perhaps new revenue streams? What new things could you be thinking about your business? Again, all of this information was developed 45 days ago, as soon as we knew that this coronavirus was going to be something significant. So we put into action essentially what we call it's all about cash flow, and an action plan for us to get out there and talk to our clients about what they're doing with regard to their making sure that cash flow becomes their #1 priority. Finally, one of the things I did mention that one of my partners, Lou Sandor, put together a great article was for those construction sites that continue to operate during this coronavirus situation, that you as a company, as a construction company, should put together a plan that basically has an exposure prevention, preparedness, and response plan that would allow you to continue to operate. That would include responsibilities for your managers and supervisors, your project managers, responsibilities for your employees, job site protection measures, which would include limiting your all-in-one person meetings, limiting or practicing social distancing during lunch breaks, providing hand sanitizer. Again, all of this you probably already know, but I do think that it's a good reminder that if you are working in this environment, you need to be thinking about a plan and that you have a plan in place. Job site cleaning and disinfecting, making sure that all your trash is collected frequently, make sure your vehicles and equipment are cleaned every day, making sure that every time that there's a new operator that all of that equipment has been cleaned. Job site exposure situations, make sure that you have proper measures of your employees who exhibit symptoms and test positive for COVID-19. OSHA reporting, make sure that you're reporting any related or work-related injuries or illness to OSHA on their 300 log, as well as the OSHA Form 301. Confidentiality and privacy, again, super important. Make sure that the organization reserves the right to inform other employees that an unnamed coworker has been diagnosed with COVID-19, and if other employees might have been exposed to the disease, so that they can take measures to protect their health. That's it for my slides. I apologize if perhaps some of you didn't see them, and I do apologize for some of the bumpiness, but hopefully you were able to understand at least most of what I've presented here.
Thank you, Bill. That's great. If anybody has questions related to the tax provisions, this would be a good time. The best way to do that is to type it in the chat box, which is on the bottom of your screen. And as we're doing that, Bill, if you wouldn't mind stopping your screen share. Okay, so Frank can get his slides loaded up. I don't see anybody has typed in any questions. I guess everybody's saving their questions for the PPP. So, yeah, Frank, why don't you go ahead, and if you think of questions related to tax, you can always type those in too.
Great. Thank you, everybody. So my name's Frank Boudelette. I'm a partner at Withum. I've been with Withum since 2005. I'm in our financial service niche, located in New Jersey. And I did do some construction clients. I had construction clients years ago, and my claim to fame is that I proved to the state of New Jersey that my client manufactures dirt, and I was able to save them sales tax over $100,000. I saved them another $50,000 because of a comma that was in the regs, and we argued about the comma. So, but I am not good with English. I'm good with math, and I'm not a tax guy. I'm an audit guy, and this is all about the tax law, about law and reading the laws. So, so we have a task force set up at Withum, the SBA Assistance Task Force. About 4 weeks ago, a managing partner asked me to kind of head up this SBA initiative, and I started reading it. I read the 800 pages that came out at first. I didn't read all 800. I read about 80 of them that came out, and then I think on Wednesday we gave a seminar. That was March 25th, and everything in the seminar was wrong by March 25th at midnight when they came out with a new version of the law. And then it actually got passed. So the bill got passed on March 27th. So what I'm going to go through here, and I'm going to try to answer your questions. I have a lot of slides. I'm going to try to touch on all the slides. I might not get to all of them, but I think as I go through, I'm going to hopefully answer all of your questions. Probably 85% of your questions I should be able to answer through my slides. I've been answering hundreds, if not thousands, of questions and emails that have come in from our clients. I've done about 12 to 15 webinars in the last 22 days. And some webinars have 3,000 people on, and they send the questions, and we try our best to respond. And I know this is a critical time. The first thing I'll tell you, the update, is that both programs, the EIDL and the PPP program, is out of money. They used all the money. $350 billion is gone. There is a bill to have another $250 billion pumped back into the program. We're still waiting for both parties to stop fighting over what they actually want in there, and can realize that there are people out there that are not getting money. So let me see if I can get the next slide. Okay, so the assistance programs, what's out there right now, or was out there and hopefully comes back, is there's two different programs. There's the EIDL, the Economic Injury Disaster Loan Program. What they added on with the CARES Act was this grant of $10,000. So up to $10,000, you go to the SBA website to apply for this loan. And you can get a $10,000 grant. We heard through some clients that they reduced it from $10,000 to $1,000 per employee, up to $10,000. The second part of this loan, of this grant or loan, EIDL, was up to $2 million loan at 3.75% interest. I have not seen any clients get that. We did hear one client got an extra $15,000 above the 10, but that was way back in the beginning of April. It seems like it's a long time ago. In my days working at home, is, I'm sure for all of you, is the same. You're working at home, you don't know which days are which days. So today I heard it was Friday. Thought it was Thursday, but it's Friday. And then the other program is the 7A loan program. This always existed, and so did the EIDL existed as well. But for COVID-19, the bill that was passed kind of added on to that program. So the 7A program is where the CARES Act came in and put in the payroll protection, the paycheck protection program. They also have an express loan program that's out there, which increased from $350,000 to $1 million. It takes about 21 days to get that. It's a loan, you pay it back, but everybody wants to know, how do I get my hands on this money where I don't have to pay back? So again, the EIDL, there's the $2 million, 3.75. It's the term up to 30 years. Normally, there was a credit elsewhere clause. Basically, if you were able to get credit elsewhere, you could not apply for the economic injury disaster loan. Personal guarantees are now under $200,000. So if you can get this loan, anything under $200,000 is no personal guarantee. The applicant has to be in business for 1 year as of January 31st. And they've relaxed some of the ways that you can apply for this money. You don't have to have your tax returns. They can rely on credit scores. But again, I haven't seen too many of my clients get this loan. It's an application online. So the EIDL is directly from the SBA. That's where you get the money from. You go online, you fill out an application. There's a lot of certifications that you put in there. You're putting in how many employees you have, your revenue, your cost of sales, and that information. And then you hit the submit button. Oh, you put your bank account in there too, which is a good thing to have. You just push the button and it goes in. Apparently, after They process that, which we're hearing is 24 days. So those that have gotten through, it's 24 days before you will see any money. At that point, you will probably get a caseworker that will call you and ask you for additional information to go through with the full loan. You can at that point say, I don't want the loan. Now the next program is the 7A. This is the Paycheck Protection Program where there's $349 billion was pumped in and it's all gone. The loans had to be obtained by June 30th. Unfortunately, it's May 17th and there's no more money. They haven't processed all the loans yet, so the money hasn't been dispersed, but the applications for these loans have been taken by all the banks. This was the first application was taken on April 3rd. That's when it opened for all businesses and sole proprietors. April 10th is for independent contractors and self-employed. Unfortunately, as I said, money's gone. But that's when the first time they can apply. This was a total nightmare from the beginning. If any of you have tried to apply for the loans, some banks were saying we're not ready. The interest rate that the banks that were being charged was 0.5% at the first round. They changed that in an FAQ that said it's 1%. So the banks actually had a little more money they could make. So a lot of banks are saying we're not going to deal with this program. It's happening too quick. We don't know what processes we have to have in place to handle this. We're not getting any guidance from the SBA or from the Treasury. Finally, some banks did say they would accept the loan applications, and some banks were saying, well, unless you bank with us, we're not going to provide you with a loan. And some banks went as far as, it's great if you have a checking account, but if you do not have a loan with us, we are not going to allow you to apply through our bank. And that's all about the know your client rules, the KYC rules, where the federal law is that the banks have to know their clients before they're giving money out. Some of those have been eased with some of the banks. The SBA has the authority to allow banks to give SBA approved loans. They've actually increased the number of lenders that can provide these loans because there was just such an influx so quickly. So there are certifications, and I want to talk about this because this, and I'm going to stress this from all the calls that I've gotten and emails. This is not your money, okay? This is the government's money that they're allowing you to be a conduit for unemployment to hand to your employees. So I've had a lot of calls where clients are calling me, or not even clients, just people getting from the webinars asking, well, how do I get to keep this money? I think I know they feel like they deserve to get this, and it's not. It's not for lost revenues. This is strictly as a means to get money into the hands of the workers. So there's a certification that you have to sign off that says current economic uncertainty makes the loan necessary to support your ongoing operations. Funds will be used to retain workers and maintain payroll or to make mortgage, lease, and utility payments. So, if you're not sure if you have an uncertain current economic uncertainty, speak to your attorneys. And, as an accountant, I can't make that decision for you. There is no rule that says that revenue has to be down 50%. We're hearing a lot of that. That's not the case. It's that you feel the economic uncertainty today requires you to have the loan so you can make payroll. Eligibility. Now, this is when the law first came out. A lot of uncertainty here because the first line was all businesses under 500. That's the information we got with the law. They've since come out. So the law was passed on March 27th. On April 2nd, they came out with the interim final rule. Since then, on April 14th, they came out with the second interim final rule. I'm just waiting for the final rule. But in any event, the U.S. Treasury website is a great place to go. First place you go is Withum.com. We have a phenomenal website where we have links to all of the forms you need, all of this information I'm talking about, links to the U.S. Treasury when they're posting. So every night, or almost every night, the U.S. Treasury is posting FAQs, which kind of helps understand, or they're like the regs of the tax law on how to understand these rules. And one of those came out, which expanded and clarified who's eligible. So eligible is if you have more than 500 employees, you're not eligible. Well, that's not, don't fret there because the small business standard size. The standard size, SBA small business standard size, allows for businesses more than 500. And I have here for construction, for instance, if you have more than 500 employees and you go to the standard size, you can see the page if it shows up. But for construction, if you are a commercial and institutional building construction, your standard size is $36.5 million of revenue. So even if you have 1,000 employees, but you have less than $36.5 million of revenue, you can apply for this loan. Now, say that you have more than 500 and you have more than 36.5 of revenue. Well, there's this alternative size standard. Now, this didn't come out until very end, probably one of the FAQs back on April 10th, I'll say, came out and said that the maximum tangible net worth is not more than $15 million on March 27th. Now, tangible net worth, that's your assets, minus your liabilities, minus any goodwill that you have on the books. If that's under 15 million, and if your net income after taxes and before carry forward NOLs is not more than $5 million average for the last 2 full years, you will now qualify to get the loan. So it now opened up many more businesses with 1,300 people that met that last criteria now can apply for the loan. Sole proprietors can apply, independent contractors, and eligible self-employed individuals. Now there's affiliation rules. Talk about that quickly is if you have affiliation, if you own several different entities, you need to look at all the entities that are under common control and you add up all of the employees at all of those entities, whether or not they're eligible to apply for a loan or not. We have a lot of foreign entities that own a foreign parent that has a U.S. corporation where worldwide there's 20,000 employees. But in the U.S., there's only 300. So you look at the affiliation rules, and basically they could be carved out. Now, there is a special rule if it's U.S., you're looking at U.S. employees for that type of scenario, so that U.S. entity can apply for the loan. But if you are in the U.S. and you own 5 different construction companies throughout the United States, and you have more than 500 employees in total, you are precluded from applying for the loan. So you have to look at that affiliation rule, and that's very important. And we have a lot of clients that have that, common ownership. Special rules for hotel and service industries, because again, they have, and for certain franchises like Got Junk, that's one of the franchises that's approved by the SBA, where if you own a franchise, if you look at Got Junk and the control throughout the country, there's probably 10,000 employees, but they look at each individual franchise, and as long as that franchise is less than 500, they can apply for the loan. So eligibility is a very interesting and tough area to understand. A lot of times we as accountants can't come up with that conclusion. We always refer you to your attorneys or talk to the bank. Now, this PPP loan you get from your bank, so you go to your bank to apply for it. Ineligible businesses or borrowers would be anyone that's engaged in any illegal activity. Household employers, I was surprised I had some people calling saying, can I get money from my household employee? The answer is no. That came out in FAQ. So enough people started asking about that, so that became an FAQ. The original law was silent on that. If you're in a passive industry, so for instance, if you are a developer of real estate, and you have, it's a passive activity on your K1, you're not going to have self-employment income. You are not eligible to borrow. Now, if you're a real estate entity and you have management company that's managing all the properties that you own, that management company can apply for the loan because that's not a passive activity. So next slide. Okay, payroll costs. This is another area that was gray. We'll talk about this a little bit more later on, but what's covered is employee salaries up to $100,000 on the salary. Then you add on the sick leave, you add on parental family sick leave, vacation time. If you have severance pay, you can add that on. Payments for group health insurance, 401k matches, and then the employer's portion of the state and local taxes on compensation, for instance, unemployment and disability. It does not include independent contractors. They can apply on their own. And this was a big misconception early on because of because of a semicolon, people were thinking it belonged into the payroll cost. It does not. So an FAQ came out and said, do not count independent contractors. And then sole proprietors, independent contractors can go up to $100,000 annually. How do the second interim final rule came out on the 14th, and that was all about these sole proprietors, independent contractors. They need to have a Schedule C. Now, even if your tax return, your 1040 is not completed yet, you still can prepare a Schedule C and submit that with your application. It's required. So, so if you don't have that done yet, get it done. You can use your QuickBooks or whatever software that you're using, and you can actually prepare that Schedule C, and that's going to be needed for the application.
Hey, Frank?
Yes.
A question on this subject. I thought if I could interrupt you there.
Sure.
From Joe here. If workers are subject to various pay rates due to prevailing wage projects, how do you determine salary levels that complies with the loan forgiveness requirements?
That's a good question. I haven't had that question. Typically the amount of money, and we'll talk the next slide here. Let me turn to the next slide. I don't know if you can, let me get there and I'll show you why. Here we go. So the loan that you're gonna get, so you take your payroll costs, what they're looking at, it's 2.5 times. So let me get a couple slides ahead and I think I'll answer this question. So 2.5 times your monthly payroll costs. So the payroll costs we talked about before, all these payroll costs here, you add up and you multiply by 2.5. It's average monthly, so you divide by 12 for the year and you get 2.5 times. That's your payroll costs. Now, what they're looking, I don't have it on the next slide, I forgot where it was, but what they're looking at is you're going to look at your 2019 year, for instance, and there's been disparity on which 12 months do you look at, but say using 2019, it's the pay that you paid people in 2019. That's the amount, whatever that was, whatever's on their W-2 is the amount that you're going to use, and you're going to get the loan based on that amount. Now, when you're paying them, and we'll talk about that in a few minutes, that's the amount that you want to pay them up to in order to get the full amount of the forgiveness. I'm not that, with the prevailing wage rules and that kind of law, I'm not 100% sure, but we can try to research that for you. So if you want to send Bill or myself an email later, we'll look into that for you. But typically the way this works is they want to keep people on the payroll, even if they're sitting home watching TV, at the rates that they were making before. So let me just go on further and I'll try to, if I hit that answer, but I don't think I have it in these slides. So the loan terms, if this turns into a loan, if it's not forgiven, whatever's not forgiven, will be paid back at an interest rate of 1%. The terms are 2 years. So you have a 2-year loan. It's 100% guaranteed by the SBA. There's no personal guarantees, prepayment penalties, and fees. So you can prepay this. So if you get the loan, if it turns into a loan where it's not forgiven, you can pay it off immediately. There's 6 months deferral. So I have a client that received the money on April 13th. So on October 13th, that 6 month is completed. They will start making their first payment on October 13th. If you did get an EIDL loan between January 31st, 2020 and April 3rd, 2020, that can, as long as it's not used for payroll costs, can roll into this PPP loan. The use of the proceeds. So again, you're looking at what are you using the money for? It has to be used for payroll. It's used for rent. It's used for utilities, interest, not the principal on the mortgages, but interest and interest on any debt. So if you have any loans, equipment loans, you can use it for that as well. And that's an appropriate use of the proceeds. Now, the forgiveness. Now I'm going to spend a little time here because a lot of people have gotten these loans already or in the process, and since the applications are closed for the moment, this is where we're going to get a lot of questions. So basically, you're looking at the 8-week period. So the 8 weeks starts the day the money gets funded into your bank account. So on April 13th, you got, sorry, here's some background noise. You got the money on April 13th. You have 8 weeks to spend the money on payroll, on interest, as we mentioned. And these are on a mortgage. It's loans that you've gotten before February 15th. It's your rent that on a building or your office space that was in place before February 15th. I had a client come to us and say, look, I want to change my cable carrier because under utilities, telephone is one of the costs that's acceptable. They want to change their carrier. I suggested they wait until after the 8 weeks, only because I don't know exactly how someone's going to interpret this law, but it says before February 15th. So if you change carriers, does that mean you're not going to be able to use that as an acceptable cost? So those are the costs that you can spend the money on. You can't exceed the principal amount for forgiveness. Now, this came out, and this is an interesting part. No more than 25% of the amount that's forgiven can be on other non-payroll costs, meaning they want you to spend 75% of the proceeds on payroll. Now, what we're hearing from some banks, some banks are saying, well, we read that to mean if you had only 70% spent on payroll and 30% spent on rent, utilities, nothing is forgiven and you owe the whole thing back. I sent an email to an individual at the SBA who said, no, that's not the case. So I'm going by his email. I have it. But some banks are taking that position. I read the law inside and out. I can't determine how they get to that. There actually are FAQs that specifically ask the question, can the forgiveness be in whole or in part? And the answer was yes, it can be in whole or in part. So if you spent more than 25% on non-payroll costs, that extra 5%, extra percentage above 25 will not be forgiven, have to be repaid. The amount that's forgiven is tax-free to the borrower. Now, the question you're going to have is, oh, it's great, I don't have to pay tax on the money I got $1 million in, but you spent $1 million on payroll. Is that $1 million payroll expense deductible? And we're thinking no. I think it's Code Section 265, and don't quote me on that. I'm not a tax guy, but from what I'm hearing, that law or that rule is if you don't have basis in your expense, which you don't because you're handed tax-free money, you might not be able to deduct that money. So, and if you think about it, if you have no revenue coming in at all, and someone gives you $1 million to pay your employees, and you pay the employees, and that $1 million that you receive, the proceeds are not revenue, you end up with $1 million loss. And I don't think the government was intending that to happen. So I don't think you're going to get the deduction on that.
Frank, Frank, if I could for 1 second, you're
Sure.
Absolutely right.
Yeah,
you're absolutely correct.
But we have hope. Bill, we have hope that the intention, because again, it's a stimulus program. So what better way to stimulate the economy than to allow businesses to have that loss and then therefore use that money to start spending? So there's always that hope, and I'm a hopeful kind of guy.
Hey,
so
Frank,
yes.
A couple of questions came in on this slide. Do you want to take them now, or do you want to wait till the end?
I'd rather wait to the end if that's possible. Just way I can keep going, and I think I might answer some of these. Yep. If that's okay with everybody else in the audience, it's up to them. But I do see the one on telephone includes cell phones. I think so. I think it does. Transportation. We're going to get, see a lot of these things we're going to get to. So I don't want to steal my own thunder, guys. so we'll get there. So the borrower will need to document how many FTEs. So what you're doing here, and let me go to the why you might not. Let's go through a quick scenario. So forgiveness. You got a $100,000 loan. You paid $60,000 during the 8 weeks for payroll. You have rent, utilities, and interest was $30,000. You're going to be capped at $20,000 because 75% divided by 60, the math comes out to 80. So the most that you could spend on other costs is 20. So you're going to have to pay back $10,000, won't be forgiven. Since you only used 90 of the 100, you're going to wind up having to pay, I think the math's off here, pay back 10. So you're going to wind up having to pay back, $20,000 on, won't be forgiven, and 80,000 will. So that's why when you're spending that amount of money, you want to make sure that you're able to spend. Now, again, you're going to spend it, giving it to your employees. So that's typically how this is going to work when your costs exceed 25%. So the forgiveness reduction. So you basically spent your money. You have your head count. There's a provision in here that reduces the forgiveness. What does it get reduced for? Well, you're looking at the 8-week period after you've got the money. You're looking at how many FTEs. Now, an FTE, and this is different. When you were looking at the number of employees, it was just bodies. Whether they're full-time or part-time didn't matter. It was a body. They're equal for the number of employees. When you get to this calculation, it's FTEs. FTEs are considered to be any 30-hour employees. So if you have 2 part-timers at 15, that'll equal 1 FTE. So what they're looking at is the covered period, which is the 8 weeks after you've received the loan. So you received the loan on April 13th. You look at the next 8 weeks, and you're looking at how many FTEs on average per pay period did you pay. And now you take that number, say that's 8, and you go back to, at the election of the borrower, whichever benefits you, you go back to either February 15th of 19 to June 30th of 19. The pay period is during that period of time. How many FTEs did you have at that point? Or how many FTEs from January 1st to February 29th? So say you had 10 employees during both of those periods. So right now you have a 20% reduction in your workforce. So all things equal, 20% of the amount that could be forgiven will be reduced. So you will not get that forgiven because you did not maintain the employees at the same number of employees before the crisis as it was after the crisis. Again, this is to get those people back on payroll. There's also a reduction for wage reduction. So say, for instance, you decided, you know what, I'm going to reduce I'm going to reduce some of the pay. I'm going to keep everybody on board, but I'm going to reduce everybody 50%. So you're paying everybody at 50% rate. Well, they don't want that to happen for those under $100,000 of annualized salary. So if you had somebody at $50,000 and you reduce their pay to $25,000, what this is going to do is it's going to penalize you where anything more than 25% won't be forgiven of the reduction. So that part of the payroll would get reduced. So this is first and then second. So this isn't an and or, this is a plus. So you look at the reduction first, the percentage, and then this is a dollar for dollar amount that's below 25%. But don't fret, because if you replace those people before June 30th, you can have this, the reductions go away. So the rehire. Now, this is very, very confusing. We were going to put an Excel spreadsheet together to try to calculate this, but we decided to hold off because there's so many dates in here on which periods to look at, and we're not sure if they're actually going to hold true, because right now the covered period for the loan is June 30th. We think that some people might not get the money for the next 2 to 3 weeks, so their 8-week period might end after June 30th. So I'm thinking some of these dates may change. But if you rehire, and this is where it gets really tricky. So say you had that 8 and 10, as I said before. Well, you want to rehire those people by June 30th. So what you do to see your reduction is you look at the period between February 15th and April 26th, which is 30 days after the enactment of the law. That pay period, you look at the average FTEs during that period, and you compare it to February 15th, and you see how many. So if you had 8 employees during February 15th, April 26th, and on February 15th, you were down to 8 at that point, you don't have to replace anybody. I don't understand. It sounds like a little loophole to me, but again, these are not very clear. There's a lot of questions that we have and we've been asking, and as we get the answers, we've been posting them to our website. So check with Withum.com, go to our SBA assistance toggle, and you'll find some of this. But again, the point here, and I'm not going into too much detail, is if you replace the number of employees to where it was before the crisis, you won't have a reduction. If you put everybody back at their normal salary, so getting back to the prevailing wage, my assumption is that you're going to, whatever they were making before, you pay them the same salary now. Because even if they're not working, they want you to get them back on their full salary. So now, and these are the dates I'm talking about. If you notice, to get the loan, it's either 2019 or 12 months ended March 31st. The 8 weeks could be, if you got the loan on May 1st, you're looking at the 8 weeks of May 1st to June 30th. But when you're looking at the reduction for forgiveness, you're looking at May 1st to June 30th is your 8-week period. Then you go back to 19 or 20. And then when you're looking for rehires, you're looking at a different period. So there's so many different periods of time. It just boggles my mind that anyone's going to be able to figure this out. But this was the government. Remember, the law was written in the middle of the night. It was a rush to get it out so that we can get money into the hands, not we, but the government get money into the hands of the people. So some unclear items. The 8-week period, like I said, what happens to the 25%? You know, now the problem here, and I think I have an example, is you calculate the payroll based on a monthly average, right? So you divide by 12. And then you get 2.5 times that number as the amount that you receive. But your 8 weeks, when you divide 8 by 52, that doesn't come to the same percentage as 1 divided by 12. So you're going to be short. So I have a question into the SBA. What happens if somebody has somebody and they pay them exactly the same amount of money that they were paying before? Based on the calculation and the math, they're not going to hit the 75%. So the email I got back from the SBA person was, that's too much in the weeds for me. I can't figure it out. So we asked him to try to help us out. So I will be in contact with him as this goes on, because this is going to be critical to a lot of our clients to know those answers. And then curing somebody at the 75%, you know, if I hire them by June 30th, how do I get their salary back up to what it was? I don't know how that happens either. It's math, I guess. I don't know. So now let's go into some frequently asked questions that I have. So, and I'll go through these pretty quick so I can get to some of your other questions. So if you were in business by February 15, 2020, you can apply for the loan. If you were not, if you started your business on March 1st, you probably can't apply for this. You can't apply for the loan. So that's the one date. I was getting a lot of questions of when I started my business. So I start February 19th, I'm precluded from applying. How do I determine the number of employees? It's the average number of employees during the 12-month period. So like I said, full-time and part-timers for the number of employees are counted as 1. So you're, and again, and the bullet 4.1I there is the affiliates. You're looking at all the related parties get added together. So if you have 5 different businesses, like I said, you're going to add them all up. And how many do I have? If you have more than 500 and you don't meet any of the other criteria, you might be precluded from applying for the loan. Again, this is a little bit more on the standard size. This is an example. The food industry, they use numbers. So if you're manufacturing cat food and you had 1,000 employees, so if you have 999 employees, you are able to apply for the loan because your standard size is up to $1,000. 1,000 employees makes you a small business concern. How do I calculate the PPP loan? So again, you're taking your aggregate payroll costs, which includes all the things we said before, was health insurance, 401k. And so what this is saying, you add all the salaries get added up first. Even if somebody's at 200,000, then you're subtracting out those that are over $100,000 as a subtraction. Some of the banks had a form that looked like that, so they were coming up with different calculations. ADP, Paychecks, if you use those companies, they were actually pulling out for you. Just make sure that you're using their forms after April 6th, because April 6th, they decided that they read something from the AICPA, American Institute of Certified Public Accountants, and their reading was that an employer shouldn't be out of pocket. So they determined that the employer's portion of FICA should be added in as a payroll cost. An FAQ came out that same night, on April 6th, that night, after ADP sent an email out to all of their clients with the calculation and said, no, you don't count FICA expense. And I will admit this, and it's not just because it's Withum. I think our team here at Withum has been on point on most of these items. We knew that was not correct early on, and we've been making some, we have a meeting every morning. About 10 of us get on a call. We call it the frequently asked question committee. And we go through all the questions we got from the day before from clients and we hash them out. So we've been pretty on target and on point with most of the items that have come out. So I do want to commend all the guys here at Withum for being right on most of these. So in any event, so you get your $100,000, you divide by 12, multiply by 2.5, and that's the amount of the loan. And then you add in your EIDL loan if you happen to get that. That's the amount of loan that you'll receive. Now, how do you determine payroll costs? And this is where I was mentioning before, it depends. Here's the actual law. Salary, wages, commissions, similar compensation, vacation pay. And then there's that semicolon. I'm pointing to it if you can see it with the line. And for an independent contractor, they only get wages, commission, net earnings from self-employment. So if you're an independent contractor, you do not get to add in your health insurance. You do not get to add in your SEP contribution. So I'm not sure why, but that was the law that came out. And there's that semicolon that, you know, we caught on to it, but I guess ADP didn't originally. And then they came out with an FAQ that said federal employment taxes imposed and withholding. This was on this side, everyone thought you had to subtract that out. Again, that was something, we don't know why that's even in the law. The U.S. Treasury puts out some information. So this is what they count. Again, the wages are at $100,000, and then you add everything else in. This was an FAQ where it came out and talked about that information. So I kind of have the information here so you can follow through on how things got to where they are. Workers' comp insurance, I don't see it in here. Some people are saying, yes, you can add it in. I don't see it in anywhere, so I don't think it can be added in. What we've been telling clients is if you add it in, just make sure you let the bank know that full disclosure, what you did. And a lot of our responses to our clients and to people calling is just ask, you know, mention to the bank what you did, let them know full disclosure, and they can decide whether or not it gets included. The 12-month period was an issue. What period do you use? Is it 12 months or is it the calendar year? The instructions to the law was 1 year period before the date of the loan is made. So if I'm applying on April 1st, it will be up to May. It'll be April 1st, 19 to March 31st, 2020. We've been like 12 months. So everybody thought that. And then the instructions on the back of the form, which I don't know if I have here. Here's the instructions, said most applicants will use 12-month 2019. So the point I'm making here is that whoever you talk to, nobody knows exactly what the rules are, because they, on their own instruction form, said most applicants use 2019, even though they were saying it's a 12 months period before the loan. So there's a lot of discrepancy and a lot of uncertainty around this law. How does a sole proprietor calculate payroll costs? Again, independent contractor, you use your Schedule C for 2019. If you don't have it, prepare one. Use your QuickBooks file, get it on the form, fill it out. You'll need that to apply. And here's some more information on where it is in the law. The forgiveness, now for a self-employed, they're automatically assuming that they're going to use 2019 and they're going to divide by 52 weeks. The problem with this is if you had $100,000, like I said before, you're going to get 100,000 divided by 12 is 8,333. Multiple for 2 months, it's going to be 16,667. But the amount that's going to get forgiven is based on 8 weeks, which is 15,385. So there's a shortfall there of about $1,000. I'm hoping that the Treasury and the SBA see this and they'll fix those. They'll correct that gap. Otherwise, you didn't do anything different. You've paid yourself the same amount that you had before, and you're not going to get all of it forgiven. So I'm hoping they're going to alleviate that. Leases of vehicles. Now this is for a sole proprietor. In the second final rule, if you had a vehicle and you had interest on a vehicle, you can take that interest on the vehicle as a part of your forgiveness. You can use the lease payments on vehicles if you're leasing them. Very important for construction. We didn't see this same information for businesses, but we're hoping that this definition flows through to where the law is written. The FAQs are not part of the law. They were just interpretations, but this came out for sole proprietors. We believe it also is for businesses. So if you have a construction company and you are leasing all your vehicles, we believe that those rent payments can be used for forgiveness. But don't forget, you can't have more than 25% of these non-payroll costs used to offset the forgiveness. Otherwise, some of it won't be forgiven. And this is the affiliation rules. I don't want to beat that up, but if you want to see some more what it is, it's about control. Forgiveness, again, further forgiveness. Now, this is a 25% rule here. So again, if you spend more than 25% on non-payroll costs, that part over 25% will not be forgiven. And again, what would cause the amount that you spend not to be fully forgiven? If you don't have the same number of employees. And we can help you calculate that as we get more guidance, or if you're paying people less money. What if I lay off people? Again, this is about hiring them back. This is the law that came out. I kind of put the law in here because I get asked a lot of questions, and I don't want to people to think it's my interpretation because I don't know how to interpret the law. So I kind of give my, the clients I deal with or anybody that asks me a question, I actually cut and paste the law and say, here's what it says. So the to-dos, number one, talk to your bank. If your current banker, go to them first to get the loan. They'll be able to help you through the process. A lot of them are online, but that's who you should be talking to. Have your payroll records ready. Now for the forgiveness piece, you're going to probably need the payroll for the 8 weeks period. You're probably going to need all the vouchers for the interest payments that you made, invoices for the utilities and for the rent. Have that all ready. Some people are saying, should I set up a separate bank account? And we're saying that's one way to do it. If you want to set up a separate bank account and just put the money in there and then pay everything out of that account to all your employees and all these expenses, then when you have to go for forgiveness, you just hand them one bank account. You don't have to show them the rest of your books and records, we think. So that's one way to kind of keep something separate and private. One thing I'll say is if you have an S Corp, I would recommend not making a distribution during the 8 week period. Just because I don't know what kind of scrutiny they're going to have on that if you take money out for yourself. So try to do business as usual during the 8 weeks. Try not to have any red flags pop up where you have to make some explanations to the bank. So that, I think I went kind of quick, but that concludes my talk. And I know there's a ton of questions, so I will try to answer them as best I can.
All right, I think if you want to scroll up, Frank, I think we left off.
I see the first one. So I have, is it Ernie? Ernie, cash or accrual? Okay. Interesting, Ernie, great question. I don't know. The law says incurred and paid. Some of us are saying it's incurred. So for instance, my electric bill is for the month of June. Now, if your 8 weeks ends June 30th and you don't pay that bill until July 5th, does it count? But it was incurred during June. We think it does, but again, without better guidance on if I'll just give you this, the sole proprietors could apply for a loan on April 3rd. April 14th is the first time they gave us guidance specifically on sole proprietors, 11 days after they could apply for the loan. So what I'm saying here is I don't anticipate them coming out with any more guidance or any good guidance. It's going to come out over time, and it might not be in time for some clients. But my thought is, say your rent and you paid 5 days after the month because your cash flow purposes. I'm going to assume that you want to have 2 months of rent in that 8 days, 8 weeks, 2 months of utilities payments. I think if you keep it to that idea, you should be fine. Prepaying, I don't think it's going to work. So if you prepay the next 6 months of rent, I don't think you're going to get that deduction or get that to be allowed. So I see the payroll cost too. Again, I don't know. We believe it's going to be what's fair. I mean, if you go by what's fair and makes sense, I think you're in good shape. A preliminary forgiveness calculator that I have seen indicate is that there are either aggregate payroll costs or FTEs that will determine forgiveness percent. Your guess is as good as mine. There are a lot of calculators out there. That's why Withum has decided not to put a calculator out yet, because there's too many unknowns of how it's going to be calculated. We're following the law as it's written, and I'll tell you the truth. We followed the law as written, and things have changed afterwards with some of the FAQs that came out. And we were scratching our heads a lot of times. It's like, well, that's not what the law said. Somebody asked about cell phones. I believe cell phones, if they're using your business. Now, if you're taking a tax deduction for it on your tax return, and this is for sole proprietors, Schedule C. If you're taking the deduction for rent, if you're taking on your Schedule C already, and you're taking deductions for a telephone and vehicle, then yes, you can get those as an allowable use for the forgiveness. But if you've never done it before and you're trying to squeeze it in now, probably not going to work. What is transportation considered as related to utilities? Good question. I don't know why they took transportation there, but what it is, I think I answered it. It's the gas for the car. It's the lease for the car. So any vehicles that you're using in the business, or a vehicle, not so much a car, could be a truck, that's used is under utilities. I don't know why they stuck it there. Payroll includes health benefits and retirement benefits as well, correct? Yes. It includes the employer's portion of the health insurance. It includes the employer's match on the 401k. So yes, you can get those as deductions. My PPP funding showed up the same day that I signed the loan papers. I plan to use next whole work week as basis for the start. It seems this is within the spirit. What do you think? I think that sounds good. Again, I'm not an attorney. I think you have a basis. What I've told everybody is in good faith, and a lot of this is in good faith. So always behave in good faith with, remembering this point. It's not your money. This is the government's money that you're handing to your employees to keep them on payroll and off of unemployment. So it's not a windfall for companies. I have a lot of questions. How do I keep this money? I don't want to pay the employees, but I want to keep as much as I can. I want to build a facility with it because it's a 1% interest rate. And my answer is talk to your attorney. Have your attorney justify with you when you sit in front of the SBA. Remember, you're signing that, you signed the papers, and there are fraud provisions in there. So FTE just relate to the payroll. Okay, FTE is for payroll cost, right? So that's the only place FTE is. The number of employees is bodies to make sure you qualify for a loan. And then when you're calculating the number of people, it's an FTE, which is 30 hours. So if you have 2 part-timers at 15, that's 1 FTE. What happens to the PPP loan forgiveness if your employees don't want to come back? Well, that's a good question. So we had a client that sent us a letter that his attorney drafted that basically said, we are now hiring you back. You were laid off. You are now hired back at your normal salary rate. Please sign and confirm that we can start paying you. And if the employee says no, they have the letter they sent out, they will probably go to the unemployment insurance, whatever that division is, and report them that I wanted to hire this person back. They don't want to come back. And then unemployment should stop paying them. So yes, they should come back. Now, the problem that I'm seeing is that some of the lower paid employees are making more on unemployment than they are when you were paying them. So they don't want to come back because they're getting that extra $600, which is putting them at, I don't know, a $50,000 a year number, and you're paying them 30, so they don't want to come back. That's a problem. That's something you got to weigh out what you want to do with that. But know that if you don't spend, you'll have to pay it back as a loan. If you don't spend enough of it, you might have some of the amount you did spend not forgiven. Higher prevailing wage rates, the $100,000 is less than 75%. Well, okay, so the cap that you have is 100,000. So if somebody's making 150, you only count their first $100,000. Anything above that doesn't count. I don't know if I'm reading this right. If I pay them 75% rate, it goes over the 100,000. Yeah, so if you decide to pay somebody $200,000 at a rate of 200,000, that's fine. It's out of your pocket. The government's not going to pay that amount over the 100,000. So if you are paying people now, if they're sitting home doing nothing, then yeah, it's going to be a problem to pay them that rate, but they're not working. If you are working and you have money coming in because they're actually working for you, then you're making money off of them. So you should have that extra cash flow to pay that extra salary. What portion of union benefits are eligible? I was told it's just health and welfare, but but yeah, I believe I believe, now again, you can't hold me to this, but I believe if the union benefits cover health, welfare, and retirement benefits, I believe that all counts. Again, when you're applying for it, full disclosure to the bank, show them the reports, let them put it in the file. Because at the end of the day, if they come back and say you did it incorrectly, you can say, well, I gave the bank all the information and it's not really that clear in the law. So I would count union benefits as that amount. Is the loan forgiven percentage based on FTE count over the 8 weeks average or just FTE count at the end of the 8 weeks? Well, it's the average per pay period. So if you're paying people weekly, you would look at, if you have 8 weeks, you'd have 8 weeks. So you'd add up 10 employees each week. You'd have 10 plus times 8 is 80 divided by 8 weeks is 10. That's your average. So that's how you count the FTEs. It's an average per pay period. I think I breezed through all those questions.
401k.
401k match counts. So it's the match. So remember, on the employee, if employee is contributing to their own 401k, that comes out of the net. That comes out of the gross, right? So somebody has 10,000 going to their 401k, you got 60, their net's 50 to them, but you're getting 60,000 on their pay. So you then have to contribute your match, say another 5, so you get 65,000 for that employee. Safe harbor, I guess assume that's on the 401k match, right? The 3%, like you're covering everybody at 3% versus 2%. I think that's, yes. See, somebody said yes. Thank you. See, some of my tax stuff is coming back to me. Yeah, the safe harbor I think is fine. I think that's part of your cost. So you add everybody up. Now remember, the thing that was confusing early on was people were thinking it's $100,000 for all those items we talked about: wages, health insurance, and 401k. And the answer is no. It's $100,000 to wages plus all these other costs. So, anything else anybody has?
If there's folks on the phone and you're not on the computer and you're not able to text or chat, type in the chat box. You can take yourself off mute and ask a question if you'd like. So any more questions from anybody?
So some of the things that we've seen, I'll just wrap it up with that. Some of the banks, we've seen some banks not accepting loans from certain businesses. We have seen some instances. We have some where they said the industry code didn't match. They were rental real estate, and we've had some banks accept that same code and give a loan. We have banks for other clients not accept it. So if that happens to you, I would take a look at the code that you were classified at, and then maybe talk to the bank and sit down with the bank and find out why you got denied. I know the client we had this morning that happened, I found out about it. They were looking for $1 million loan. But they're actually working right now, so they haven't really been that affected. They're meeting payroll, so it's not that detrimental to their business. But the fact is that we did have some clients that did apply, and it could be that they applied for the wrong entity. They didn't use the management company. I hear some noise, so people want to ask some questions. Fire away. No. Okay.
I guess we got all our questions.
I think I have a quick one.
Sure.
You've referred to average FTEs and also employment levels on June 30th.
Mm-hmm.
Where do each of those numbers apply? Because I think I've got them confused.
Okay. So what you're looking at is the 8-week period after you get the loan, your average FTEs during those 8 pay periods. Assume you got the loan on April 13th. So you got the loan on April 13th, your 8 weeks ends June 13th. And I'm not 100% on this because there's not a lot of guidance. But if you hire, and you only had 8 people, if you hire that other person back by June 30th, or 2 people back on June to get to the 10 that you had before the crisis, you will not get hit for a reduction on the number of FTEs because you had them in, you hired them, they will count as 2 people, 2 full FTEs. Now, we don't know how they're going to determine that, but that's what the law, what they were trying to encourage was that you laid people off because you don't have money coming in, so they're all in unemployment. They want you, once you know you're getting this loan, to run back out, hire all your workforce back, even though they're sitting at home, and now pay them over the next 8 weeks so that you use all the money that you received.
Right.
So that, and again, I wish I had a better answer for you right now, but this area is so unclear because I think they worried about the loan portion, how to calculate the loan amount. Now they're going to hopefully concentrate on this forgiveness. And, we're reading a lot of other sites of other attorneys and accountants that are putting information out. And then we brainstorm internally, and we have some really, really smart people in the firm. And we're going through this continually to see what it is, but we have every scenario thought about. We're just hoping to get those answers.
Can I ask a quick follow-up?
Sure.
My banker, we had a really long, nice conversation, and he basically said, there's limited guidance. We don't know, which is largely what you're saying. But he's also saying that we don't think we're going to get such great guidance. And at the end of the day, you're going to have to certify certain things to us. We'll have some paperwork. We're going to certify certain things to the government. And unless somebody's doing a lot of audits, and I'm not advocating people do things outside the law, but the really fine details may not be as critical as accountants would like it to be, right? You know, because they like things to add up. So I'm just curious if your impression is the same, that the banks are going to have some leeway in trying to keep it all within the spirit of the law.
Yeah, so that's a great question. And the banks, with the loans that came in when they were processing, one of the things that came out was that the burdens on the borrower to determine that they were eligible to apply for the loan. The burden was on the borrower to calculate the loan amount correctly. The bank, in good faith, unless they saw something that didn't make sense, took the application and gave the money based on that. For the forgiveness, the same thing. It's the bank is accepting the borrower's calculation. But the difference is on the loan, I had clients that applied on a Saturday night and got the money in their account on Tuesday morning. So they're processing things quickly. The back end for forgiveness, once the 8 weeks is up, you apply to the bank or you're the lender for forgiveness and you give them all the documents. They have 60 days to process that and give you and tell you whether or not you're forgiven. So imagine you have 60 days to scrutinize over those documents. So, and again, it's the government's money and they want back whatever you didn't spend on payroll. So my thinking is that they are going to scrutinize the forgiveness piece a lot closer than they did on the money they gave out. Now,
Right.
They haven't reached out to firms yet, but I did some work in New Jersey at the EDA and some grants that then and credits that they had. And there was a firm that was hired to look over the work that we did on our audits that we did. So I'm pretty sure the government's going to either hire an outside accounting firm or the banks are going to hire an outside accounting firm to help with some of it. I don't think everyone's going to get looked at because the amount of money the bank's making on a $2 million loan, the bank gets 1%. So they're getting $20,000. So the banks aren't making a lot of money on each of these loans to go out and hire an accounting firm like Withum to come in and spend $15,000 looking over your records, right? But I think there is some good faith, but that's a good point. And again, my point there, and I've been stressing, is just be full disclosure on everything that you did. And if you fully disclose it, all they can say is, hey, you know what, this doesn't make sense. And maybe, you know, based on your relationship with the bank, you might get something said, you know, we understand what you did. We're fine with it. You know, so we don't know.
Right. Okay, great.
Frank, another question real quick. Can we share the slides? And another question from Jeff as well.
Yeah, you can have all my slides. And Jeff, but if you restore your payroll by June 30th, is that good enough to not get hit with the reduction from FTE perspective? According to what I'm reading, the FTE reduction, yes, you'll satisfy the numbers. What you won't be able to satisfy is the reduction in salary. And that's where the quandary comes in because, again, you have somebody that was paying, you were paying $50,000, right, before, and that's how much you got the money based on their 50. If you don't hire them to June 30th and you have no payroll for that person and you can't reduce them by more than 25%, well, you've reduced them to zero. So that 50,000, 25% is, you know, more than 25% reduction is what, I don't know, that's 12,500. So you may lose 12,500 or whatever that, you know, percentage is on number of months and all when you do the calculation, but you might lose that piece because I don't know how you can restore their salary if they come back on June 30th. But you definitely won't have the top portion reduced, you know, for the reduction in number of employees. And again, I don't know how they're going to work that out. I don't know if it's after your 8 week. What if it's before your 8 week period? Then okay, you bring them back because your 8 week period starts, you know, May 15th and it goes to July 15th. So June 30th is in the middle, so that might work. But if your 8 weeks ends on, you know, June 13th, then you bring them back. I'm not sure. I'll be honest with you. I'm confused, but I'm not that smart. You know, but I have a lot of smart people in the firm and they're saying the same thing. So I feel kind of confident that we don't know. But I will say this, that, you know, Withum.com, and I said it a few times, go to our website. I think we have really good information there. And we have we have a live document. I call it a live article, where we have about 18 questions, and we have the question that we have, what our take on it is, and then what the conclusion is. And we're answering those as we find information out. We're populating that. So some of these questions that you're asking are on that website, and as we get the answer, we'll post it.
Great. We're over 1 o'clock, so I think we can end it here. Just want to take a minute to say thank you to Frank and Bill. This has been great information. We will follow up and send a copy of the slides. If anybody has follow-up questions later, feel free to email me at ASM or call me, and we'll try to get answers. We'll just direct you to Withum's website. So once again, Frank and Bill, thank you for your time and the presentation. We certainly appreciate it. And thank you for all of our members for tuning in. And have a great weekend, everyone.
Thanks,
Good luck,
Mike.
everybody.
Thanks.
Thank you.
Bye-bye now.
Bye-bye.